We've seen a huge inflow of capital into defensive havens over the last few days following the Brexit referendum results. As traders, however, start to digest this big surprise, we are seeing the volatility start to subside a little bit and some trading corrections kick off. I'm going to start with gold, but we're also going to look at yen pairs, particularly as this week is a huge data week for Japan and what the implications of that are. We're going to start off with gold. Gold had a nice run up at the beginning of the year. This was related to China uncertainty. Gold bottomed out with this double bottom just above 1,000. Initial rally up into the 1,200 to 1,300 zone, where it's been about about 4 months or so, consolidating and digesting its initial move upward. In the recent weeks, though, we've seen the gold start to pick up again, blasting up off 1250 through 1300, traded as high as 1358 at one point. More recently, it's been retesting its 1305 breakout point as new support. This is indicative that its broader underlying accumulation trend remains intact, although RSI rolling over here a bit is mixed. So it's broken out of a downtrend suggesting upward momentum, held 50, confirming upward momentum. Short-term rolling over suggests we could see it drifting back into perhaps a sideways range emerging between about 1305 and about 1305. Or perhaps even maybe lower 1335, where it may digest some of these gains. Because of the ongoing uncertainty over Brexit and the ongoing uncertainty about the U.S. election and other elections, we still could see over the next few months gold and defenses remain elevated, although they may not be screaming higher as they had earlier this year. I also wanted to look at the yen. This is a big week for the yen. The yen was driven down, or yen pairs were driven down, so the yen strengthened as on this huge flow back into defense. But it's a real problem for the Bank of Japan because they're trying to run a stimulus program, and they would rather see their currency depreciate than appreciate. They want to see it go down, and instead it's been going up. So they've got a real problem. This week we get a lot of Japanese data. That's going to give us an idea of how is this their move to negative rates earlier this year impacting the economy. Is it having a positive impact, or is it being offset by the rally in the yen? We should get a better idea of that over the course of this week, so we could see some volatility in Japanese yen pairs. And I'll start off with the yen against the US dollar. And we'll just bring this up. So we've been in the downtrend, yen appreciation, really for almost a year now, but it really got underway in earnest in December, so the last 6 months. And so we had this huge plunge here. But look at this. It dipped below 100 down to 99 and has since bounced back. It's actually been holding here in this 101 to 103 area trying to build a base. Most interestingly enough, positive divergence in the RSI. That's telling us this big long downtrend might be starting to wind down. And momentum may be starting to turn back up the other way, but the first resistance is here at this breakdown point near 103.55. It would need to clear that to start signaling a new uptrend, and really it would need to get back above these twin highs here around 106, and the 105 round numbers in here as well. Also wanted to highlight the euro versus the yen. And we're seeing the same sort of thing, big long downtrend, big plunge. This is starting to look like it may have been a selling climax for euro yen, or a buying climax for the yen alone. Again, we're getting a small, we've got an overbought RSI here, potential for a rebound. We held 110. It's now 111.50, finding its way back up towards 113.50. Initial resistance probably in here. This is around 117, and this intraday low here is around 115.65. So it looks as though the big rush into defensives has subsided now, but in this case they look like they're consolidating at higher levels, maybe a little bit off their highs, while they digest some of the things that happen. As I know, there is still a higher level of uncertainty, so we may not see these markets give it all back, but it does look like we're going into a phase where we could see more swings within emerging sideways trading ranges.